certainly something to take advantage of while we have it. And, we're going to talk about taking advantage of what we have as far as the situation in retirement, taking things that might be financially, might seem as adversity, but looking at them as opportunities. And so we're going to talk about on this week's show. Let's start off with this. Actually, the Federal Reserve recently gave us its fourth straight jumbo interest rate hike, another 0.75 of a point on the second. And all indications are it's not going to stop with the increases until inflation is tamed. Jerome Powell has said as much, which is dashing hopes for something called a soft landing, when a recession can actually be avoided. It's not something that we can control. We all have to deal with what the Fed gives us. But can you guys engineer a portfolio that has its own soft landing?
Yeah, I think, right now people are rightfully concerned about what's going on. We had a nice month last month in the market, but a pretty volatile start this month with what's happening in the market. I had a lady who recently had come in, and she was talking about her overall accounts and was concerned about what had gone on so far this year. And, what she had talked about doing is talking about taking her money out of the market. She felt that for the next maybe couple of years, she just wants to sit on the sidelines until things look better. And so, one of the concerns I have about that is, we don't know, quite frankly, what the long-term impact is going to be of the Federal Reserve rising interest rates. I mean, we can use history as a guideline, and, aggressively raising interest rates like they have been is not normally a good sign for the market. The problem is if you go all the way to cash and get out of the market, if and when the market comes back, you have no opportunity to be able to participate in that overall recovery. So there are ways that people can take some steps to try to limit some of the risks that they have. This year is kind of a different year than most years. In the past, what you think of when investors have a balanced portfolio, maybe a combination between stocks and bonds, the hope is that if stocks are down, your bonds are up. And, what we've seen in 2022 is both stock and bonds have gone down this year. So it's not been an area where you can hide from. The good news is with, the rise in interest rates, that has an immediate and dramatic impact on some other options that are out there. So, with bond funds, we've been talking about the interest rate risk, and I still think there is some interest rate risk within the bond fund category. You can take and you could reposition that money over into something like a money market account. You could move it over into fixed annuities. I just saw some annuity rates that we were helping folks with that in the 5-year category, the rates have got back up over to 5%. And it's been a long time since we've seen rates that high. Of course, we've talked about the government I-bonds and being able to take advantage of those, and you eliminate interest rate risk. You can purchase bonds and have bonds where you hold them individually to eliminate some of the interest rate risk. So to me, what I say is I talk about taking steps sideways versus just completely getting out of the market and not having an opportunity. Usually when somebody waits till things look better or feel better, it's because the market's already gone back up and it's too late. So getting out while the market's down makes you feel good because you, quote, stop the bleeding, but then you don't really have a chance to take advantage of getting it back. We looked at, the Charles Schwab money market rates, and the money market rates is something that's really pretty surprising. The money market 7-day yield as of 11/4 on the Schwab.com money market fund website is now 3.3%. So even money market rates have dramatically gone up where you could put money into something like that and reduce or eliminate the interest rate risk in bonds. The other thing that we oftentimes talk about is we talk about what is called a fixed index annuity and also talk about protected equities. So a fixed index annuity is an investment that, allows your principal to be safe from market decline, yet allows you to participate if and when the market goes back up. So again, what somebody can do if they want to limit the amount of downturn that they could have, the fixed index annuity can be a way to kind of put that floor in place with whatever money that you put in it, yet still being able to be in a position where if and when the market comes back, you can participate in those gains. We also have a strategy that we work with called protected equities, which allows us to have a unique approach to kind of hedge some of the overall strategy. So if you haven't learned about protected equities, go over to our YouTube channel. You can type in protected equities and watch a video on that, and that'll show you a little bit of how they work. We also have a video on index annuities, which you can check out that video to have a better understanding. just like with any investment vehicle, there's always pros and cons of what you do. So our goal is to help you make a better educated decision about what's right in your situation.
You know, Nolan, I had a client that I was meeting with last week for their review, and one of the things that they mentioned was they're looking at buying dirt. And I go, buying dirt? And he says, yeah, you know, we've went to the cash position many, many months ago, long before the market really started, its big downturn. He says, what we're looking at doing, and he went to college for, he's an economist, right? He says, what we're looking to do is actually get some property. He's because what's going to happen, and I'm just telling you this because, you know, this is kind of a perspective for people out there, right? He said what he sees happening is at some point, the interest rates are going to be at a point where we're really starting to feel it. Right now, people aren't really feeling the interest rate increases that much. They are, but not like a lot of people think, right? He says when these people start to really get hit with these interest rate increases, then you're going to see where the contractors are going to be looking for jobs. So you're going to be able to hire some contractors at a discounted rate based on the last couple of years, right? And he said you're going to see a possibility of a surplus in construction materials. He said you invest in property now. If you have cash available, you don't have to finance it. You'll be able to do a lot of nice things with buildings and things like that if you have the position in cash. Not everybody does. Some people do. And if you're one of those people that may have a lot of cash sitting on the sidelines, that might be an opportunity as well. I just thought I'd give a perspective of one of the clients I talked to.
Yeah, you know, again, there's no Swiss Army knife of approach. It all comes down to what your end goal is and what you're trying to accomplish as somebody, you know, close to or in retirement time. And there's many different options that are available out there. There's actually publicly traded investments that are real estate investment trusts that do everything from different properties to land to things that you're talking about.
Sure.
If people didn't want to be involved in the day-to-day operations of what I call tenants, toilets, and trash, you know.
Right.
As I own the building here in Arrowhead Park, America's Retirement Headquarters, you know, this 21,000 square foot complex, if something goes wrong and the basement floods, you know, they come looking for me. So
Right.
again, everybody's situation's different. There can be things to do. Just an environment. Again, we'd remind you, don't make a panic decision and don't make a knee-jerk decision or dramatically change it without fully understanding the pros and cons of any changes that you make.
Having a little bit of that emotional detachment to help empower you, you know, when it comes to your retirement strategy, your overall financial strategy. As with so many things we talk about here on the show, it's not an all or nothing situation. And not just saying you don't need all of your money in the market or all of your money out of the market or in cash, things like that. But even, you know, having parts of your money, because you look at, you know, the S&P 500, for example, and yes, you can see that, you know, it's had a bad year, but not every single stock in the S&P 500 has had a bad year, has seen a downturn. And so there is opportunity, there is growth potential in some of that, and finding out the right blend for you really depends on what you're comfortable with. And that's where having a customized strategy really comes into play. That's where the team at America's Retirement Headquarters really comes into play when it comes to protecting and preserving your retirement. So pick up the phone, give a call, schedule a time to speak with them, 419-794-3030. You can also go online to americasretirementheadquarters.com, as Dylan mentioned earlier, about a week away from that, or just a couple days away from that Baby Boomer Basics class going on at BGSU at Levis Commons. You can get more information, including how to reserve your seat, by going to the website, americasretirementheadquarters.com.